allows me to look at a pattern that I like and then draw a conclusion. And I actually just heard the sound, so we do get the results. So this is the same system basically on the NASDAQ 100. And even though it might not look as good as the other one, it stays well above the what am I using as a benchmark here? The Qs. So it stays well above the Qs and moves up with it when it moved up. Let's take it away. I want to see how far. Yeah, and then it came down a little bit. So it's actually, the drawdown is way less than the Qs and the metrics. What is it? Slightly above the benchmark, but considering that the drawdown is less here, maximum drawdown is like half of the Qs. So I think it's a good strategy, especially if the results on the S&P 100 are true. So that'd be great.
So you're taking 2% of equity per position.
Yeah.
And you are, if a trade goes against you, you're just basically turning it into a buy and hold.
Yeah. I mean, as I said, I was just playing around with it, and I was saying, this is the pattern. You have the top here, then it drops, and then it finds a little bit of a bottom, and then you get this, close that is very much higher than the open.
Yeah.
And that was it. And that's all I played with. So I didn't do any optimization. I didn't do, I was just saying, oh, this is something you always see. And then no optimization. I just dragged in the 10%. You can see it here. All I did was a 10% stop profit target or stop profit target. So I could go now into the backtest results, go to my positions.
Yeah, just out of curiosity, can you sort by bars held? Because there you'll see, and bring the longest ones up top. There you'll see all of the kind of the ones that got away, like the ones that, that you weren't able to. Well, although in the end, I mean, some of them went out of the NASDAQ 100. That's why you see some exit dates there, even though it didn't hit the profit target. So in these wealth data sets, if a symbol like Dell, the second one, is removed from the NASDAQ 100, which happened here on
October 29th,
October 29, 2013, the backtester will close that position. So that's why you see a loss there, even though Volcker only has his system set up to exit at a profit target. So that's an interesting, kind of showcase of our intelligent wealth data sets.
Yeah. I mean, this is really, this is really one of the other powerful things, because you can see here, that's the other one, CTAS. I have no idea what that is, but it got dropped, and I had to close my positions. Everything else, I mean, like Intel, see this one. This position was held for 4,390 days.
It's like 20 years.
Yeah, it's like a long time, Well, you invested 2%. I mean, I'm not saying it's good. What we could do now, how could we analyze it? I mean, we could
just for the heck of it, let's throw in a stop loss and see, does adding a stop loss really help?
Yeah. Well, I would probably, if I would add a stop loss, I would probably use something here, the MAE, the maximum adverse excursion. I don't think it'll help. Anyway, I'll put it in. Okay, so we'll do it. So we do where are we? Stop loss. So let's stop loss. What do you want? 20%, 25%?
Let's ask Diego and Michael, and then we'll take the average.
Diego, you're first.
I will less than 5%. Otherwise, our risk return.
Here's what we can do. Let's run it let's let each one of them pick, and then we'll run each one, and we'll see if either one of them improved the result and which one was better. It'll be an interesting test.
So Diego, you say 5%?
So yeah, let's let's get Michael's stop loss.
Yeah, I'd throw in a 15%.
Okay,
15%.
So let's start with 5.
Yeah.
So our profit without a stop loss is 287%.
Yeah.
And
the equity curve looked like this.
Yeah. And this price grid strategy does take a little while to compute, especially on the nice small kind of laptop that Volker likes to use. I mean, he's more about style than substance. So he likes the small, nice looking laptop. He doesn't care about a powerful CPU or, but, so he has the
Actually, this is not a small one. It's a 17-inch, but it's only 1.3 kilogram. Can you imagine for a laptop? I mean, Apple cannot beat it. So 1.3 kilogram for 17-inch monitor.
Okay,
so
here we go.
This is, I don't even think we have to go to the metric reports.
You got it.
16, we went down from, what was it, 247% down to 16%.
Yeah. The equity curve, and obviously most of the positions were closed with a loss. I would say obviously. So now we gave Michael a chance, and we changed that to 15 and run it. And you know what I think about optimization? Not much, but is it really? No, it's still running. So
yeah, you might be surprised. I mean, people might be surprised that adding these stop losses results in less profit overall. But I mean, it depends on your strategy. I mean, a lot of strategies attempt to buy low and sell high. So at the point where these stop losses are getting hit might be actually the point that you should be buying. And I mean, this strategy that Volker just threw together, yeah, I mean, all it does is it exits at a 10% profit target. So the sacrifice there is it's using 2% of equity per position. So the trade-off there is you're going to get a lot of positions that you never exit. They just become your lifetime, buy and hold positions.
Your wife.
I'm single. So we have 82% for the 15% profit target or stop loss.
Yeah, and we definitely have probably a much lower drawdown here. I mean, I could say. So I as Dion said, I usually would pick a far away stop loss because the risk that you take, and that's probably what Dion meant at that point when he said you only risk 2% of your equity. So even if it goes down to 0, you lost 2% of your equity, whereas others might go up 10, 20%. And if that happens 10 times, you already get out of that trade. I know that in general, they always say, oh, you have to have a stop loss, and your stop loss, has to be like your profit has to be double what your stop loss is. From my research, at least on stocks, it never worked that way. So that's basically, and that's what the software is there for. Basically, is it true what they say, or what you read, or is it just plain rubbish? And let's just see, another important point is, of course, this NSF, which is very low here. NSF is not sufficient fund. It's basically, you have 2,200 positions, and 18 of them you couldn't take because you didn't have enough buying power at that point when that signal was generated. So this is really, and it was so simple to create this strategy.
Volker,
And,
can I ask a question? Can you walk us through the PriceGrid? I mean,
yep, yeah,
for, you know, where do you start? You know, how do you? How do you use this tool? And how do you get to that picture, to the grid?
Yeah. That's
well,
good.
You first have to install the chart patterns extension.
Yeah.
And then you go to the extensions menu, and you go to the PriceGrid Editor.
So, and this is how it is. I mean, this is the ones that I created. There's another good one that I created. And what you see then here is basically you see a chart, any chart. It could be anything. So, and I'm not using here any PriceGrid right now, right? Because it actually shows me some lines here, Dion.
Well, it's a blank PriceGrid, so yeah, everything is empty.
Okay, but because I see this,
I mean, it's still a PriceGrid. It's just that, I mean, it's not a PriceGrid that you would ever get in reality. It's just like an empty one to start off with.
Okay.
That's why, that's why all the values are kind of low. You'll never see a 100 in that indicator.
Okay, so this is basically how you go. You go to extension. I mean, you have downloaded the chart pattern. Then you go to PriceGrid. And then you get here. This part here will be empty for you. This part because you haven't created a PriceGrid yet.
Well, mine has T3 already, and I've never used it.
Yours has T3.
Yeah. Anyway, no problem. But I've never used it.
Did you download it from me? Or did I post it somewhere?
Oh, you're right. You're right. It's empty. So I must have watched your screen. Sorry.
Yeah. Okay.
It is empty. Okay. It is empty. Yes.
Yeah. So basically, now you look at it, and then you look at your chart, and then you can say, "Wow, this looks like a typical pattern that I like to trade, or that people like to trade, or that you think could be profitable." I mean, since I usually like to buy low and sell high, I would probably pick this area here from here to there, which is probably what I picked earlier. So looking at it, but I mean, you could also say you want to buy strengths, and you would then go with your mouse here, keep your mouse, select a defined pattern. You have to press this button, select a chart area to define the pattern, and then you hold your mouse and you drag the mouse over to wherever you want to go. And I mean, this would be then probably a pattern that I would use if I want to see if I can go short, because, after this, it goes down. So basically, I'm looking for something that is going short. And then it actually draws, let me see, can I open this? Yeah, here it is. And then it draws this line, which looks a little bit similar. For me, it looks like a face recognition with obviously very unclear pixels, but it looks like a face recognition which says eyes, nose, mouse, and then it goes up all the way, and then that's it. So you basically see an abstract picture of this area that I just draw. You saw that?
Yeah.
And then from there, I don't know what Dion did here. He created some kind of crazy code, and we just leave it as it is. And then
that code, it is possible to use that code if you want to use that PriceGrid in a C# strategy, for example. You can, recreate that PriceGrid in your code by using this code.
Yeah, so basically, and you can see it from here. I think you see it from here. No, we did it from here, I think, to there, where it goes 100.
Yeah.
And this would be, if we believe that this is a typical pattern to go short, I would now save it as, let's say, PriceGrid short pattern. And I would save it and have it right here. And now, it's magic. For me, it's all magic. And then I go to my building blocks and I say could you all follow me, or do you have questions before I move on to the next step?
No, very clear. Thank you.
Diego? fine?
Just I was thinking about it would be very interesting if we can capture other parameters as well.
You mean like indicators or?
Yeah, not only price. Imagine to capture patterns on price, but also on volume or any other.
There's a you know, and I was thinking, you know, everyone probably thinks along that same line. There's a million things. Yes, having volume with it or some indicator with it. It would be great to have. I'm just amazed about the results already. So, but I think it would be great to have.
I like that. I like that idea. It would be for a future enhancement. It would be, you know, good to be able to create one that also encompasses volume.
Yeah. So to continue, what I was doing or what I would be doing, you know, basically we were just using using that pattern on a chart that from the Qs. But, you know, this could be any stock. This looks very normal to all of us, right? It looks like a pattern in the stocks. So what I would do now is I would create a new building block, and I would not say sell at market. So I would say, I wouldn't say buy at market. I would say short at market. Take this away, short at market. And I go down here. I go to PriceGrid that I drag over here, and that it already has it in it, which is good. And it has to have a confidence level of 80. So going back to my PriceGrid, so confidence, the way that I understand it, I'm pretty sure I'm right. It has to be 80% the same.
Yeah.
So it doesn't have to be 100%, you know, that would be very difficult to find a pattern that looks exactly like this. But it has to be 80% like this. And we can verify it because we can remember that this here, this part was our basically our sample. So let's go back to our building block.
So just run it on the last few months. I'm sure it'll be profitable.
Okay, let's do it. So I'll take I put in cover with a profit target, and do you want me to put in 10% again? And we don't do any stop, which could be painful.
I would put 5 here.
You would put what?
5% profit.
5%. Okay, yeah. Going short is, you know, going against the waves, basically. Anyway,
well, right.
So
I mean, there's always a long-term bias. I mean, prices go up, inflation. I mean, in the 1950s, you could buy a house for $2,000, right? So there's definitely an upward bias, and that's in the stock market too.
Yeah. So okay, what do we have? We use the NASDAQ 100. Do you want me to use it only for like 10 years, Dion, or 5 years, or
whatever you decide?
Okay, I'll do 5 years. I don't know whether we have some down market there or not. So I say 5 years, 2% of my equity. I use the NASDAQ 100. This is our basically our strategy, and I run it. It's loading the data, and it should be much faster now.
Is the PriceGrids checking done on the basis of percentage changes?
The evaluation of the confidence factor?
Yeah.
Well, what it does is it creates a price grid of the same width on each bar. And so the price grid has a number of cells that either have, you know, a filled cell or an empty cell. So then all it does is it counts up, or it checks each cell by cell, to see if the two corresponding price grids are the same. And it just gives you the percentage of matching cells in the main price grid and the temporary one that was created on that bar that you're testing.
But what exactly is being checked? Is it like a binary situation, like goes up or down? Or does it actually check how much does it go up?
No, it's not checking whether it goes up or down. It's checking how well the pattern matches with the data that you're looking at.
So if for example, we were, I mean, if Volker had picked, say, a candlestick hammer, right? Significant downtrend with recovery in the same bar. Would that be something that specifically PriceGrid
no.
For?
This the PriceGrid currently doesn't consider whether the bar is going up or down. It's just whether or not there's data in that cell.
And would it look for the depth of the or for the length of the bar?
Yeah.
Okay.
You could, I'm pretty sure you could. Let's go here, and you could basically say shorted market if this is, and if well, do we have something like and I say hi to Prasad?
Yeah, look, you could do a indicator, maybe indicator compared to value.
Indicator.
I mean, we could do like candle code.
Indicator compared to value. I could add this and then do.
And then say, use candle code. That's my one of my favorite indicators. So you can then say, if you want to make sure it's like a down bar or a red bar as opposed to a green bar. Is that what you're getting at?
That was a question to you, Michael, I think. Well, was it to me?
My question is size of the bar. Does it look for, does it look for a relative shape of, of the.
Well, right. Yeah. The PriceGrid takes the length of the bar into account. Yeah. Because you can see it. You can see if it's a long bar, then you'll see that those cells are filled.
So say that Volker has now defined this nice price grid on an index or ETF like the QQQ. Once he's got that pattern, can he apply it to any single equity?
Yeah.
Knowing that the percentage moves will be quite different. The volatility of each single equity will be a lot higher than the QQQ. Right?
Yeah. I mean, as long as the data in that range is moving with that same relative shape, then you'll get that high confidence factor.
Okay, very nice.
So, just real quick. So Prasad, you can hear us. Everything is fine. Don't know whether I see a chat here somewhere. Yeah, good. I see a chat. Okay, good. Yes, all okay, good, great. So, basically this strategy was that good. It's very difficult to find a strategy that is good in shorts or going short.
Well, it was good in the last couple months, like I said.
Yeah. Just like you said, it was good here, obviously, but
yeah,
you have to find out why it was good and things like this. So yeah, but it was definitely good since beginning of 2020. I was definitely...
So let's look at a trade on the chart just to see it in
action. Okay, wait, I'll go here and check the positions, and I put the open positions on top, which are all down now. Oh well, yeah, those are the old ones. And let's take some of these. Let's take a good one. But you see, after basically every trade that I closed with this was actually pretty. There's a lot. Let's take this one. What is it? No idea what that is. So it was basically going, it was going short here. And you can basically, the interesting thing is now, it probably is this up move that we've seen, and then that sideways move, and then down, and then that last bar actually was even up, just like I think it was in the PriceGrid. And then the next day it was going short, and it exited immediately. So that must have been was that our profit target? We had 5% profit target. So this is, you know, if I would increase this, probably it would probably look very much like the price grid here. It actually says the 80%. It reached the 80% down here. You see that?
Can you go to the design surface real quick? I just want to check the building block that you
mean
used.
this one?
No, of the building block strategy, just the design.
Okay.
surface.
Okay, 1 second. Going back. This was the one. No. Windows. And then the design surface, yeah.
Okay, yeah. So, yeah, it looks like your short pattern, you know, did kind of have that shape where it moves up and then kind of to the side a little bit.
Yeah, yeah. I mean, you could see that basically here in that it moved up and then it goes sideways.
Yeah.
I mean, it's basically the exact opposite of what I would originally, what I looked for at the T6, which was actually a bit more random. And I think I had another one before T6, I can't remember. But you see, this is the kind of price pattern that I would look at. Actually, I did this one too, which was good, even for going long. But the one that we did just now for the short pattern wasn't that good for going short. We probably would need even a higher, you know, going sideways and then making another step up high.
Now,
so
just based on our discussion, I mean, there could be a couple of ways to improve the price grid. One was the volume. If we somehow encompass that, maybe as a little thing on the bottom with, you know, bars. And then another thing might be, instead of just cells that are either empty or filled, maybe the cell can be, you know, like a 0 if it's empty, and then a 1 if it's an up bar, and then a -1 if it's a down bar. So then the price grid could also include the information of whether the bar is like up or down.
Yeah, I mean, there's a lot you could do, and you know, and we have to see whether this will actually improve the let's put it pattern, face recognition tool there, because I think often enough this generalization here is often enough good enough. Let's go to our last one. Which one did we have? T6? Was it T6 which was so good? You know, this, I mean, this looks like a really wild pattern, but when we tested it, I wonder whether I still have it open. PriceGrid, was it this one? Is T6 in it? No, go here. Yeah, this one was using T6, and just for Prasad, that PriceGrid, that actually produced excellent results without the stops, by the way. Let's take the stops out. And it was actually producing excellent results here. I have to run it again. And the pattern was basically this one here, a wild pattern. And it didn't even know, as Dion just pointed out, and I didn't even know that it is not aware of whether this line is going up or down. So, and as Diego said, maybe using volume as an additional information would be interesting too. I'm always afraid of over optimizing. So, but I mean, I could be. You know, you have to check it. I remember, Dion, long time ago, many years ago, we had someone who said 3 bars up and volume that goes down was a sell signal on monthly data. Do you remember her?
From the Traders Expo?
Traders Expo, yeah.
Glenda, right? Glenda Pagan.
Yep. She came up with that pattern, and we tested it. It worked kind of okay, I think. I wonder whether that would still hold this bull market that we had. So was that this one I was running just now, and that gave me that backtest results? Yep, must have been this one. So this was the strategy, the T6 pattern that I created, and it was really good, cool, I like it. One thing that I like also is number that I always look at is average profit percent, close to 5%. Nice, you know, a high percentage. And how many percent winners do we have? So yeah, that's something I also like.
The percent winners would be a little bit further down. Yeah, right there.
Yeah. I see them. So we have about, wow, 89% winners. That's a high number.
Well,
but that's because we don't.
You're not selling. If they're a loser, you just hold on to them.
Mhm.
Yeah. Well, and that's you know, that's that thing, you know, you only risk 2% or even 1% if you have a different strategy. So all you can lose is 2%. So, you know, that's
better than
so you
options.
don't need
It's better than options trading, right?
Yeah, but you lose everything. So you can only lose 2%. Obviously, if you lose 50 times 2% in a trade, it's terrible. But I mean, as you can see from that positions.
Yeah,
I mean,
this is like going to the casino and playing, you know, like many, you know, rolls of the roulette wheel, but you actually do have an edge where the casino doesn't have the edge, but you have the edge.
Yeah. I mean, so this is what I came up with. Michael, I don't know whether you could follow me on that, how I created that PriceGrid and how I easily created a strategy with it. But this is really, I think this is fantastic for anyone who wants to analyze the market, or even, you know, if we go to that chart and we go to, well, this is Google. So if you, in principle, if you would say, we have this formation in Google, and what does it actually do with, what did it do with Google in the past 10, 20 years, or with the market in the past 20 years? This formation, I mean, I love this. Goes down, goes up a bit, goes further down, which you would consider as a break, but then it goes up again. This is a great, you know, way to give an analysis of a stock or a overall market that is backed by results like this, where you say, yeah, you have 89% winners if you keep on trading it. You have a high chance that it goes up. I mean, we could try an exit signal after 10 days or something to see whether, what is it if you sell after n bars? You know, let's make it 10 days or 10% for that matter. But this will be my final run. And then so this is all PriceGrid, but I'm loving it. So we see it running. And I mean, this could be obviously optimized, which I'm not saying you should do, but if I optimize, I would always use walk forward optimization. And I would always use it as a parameter stability test. So that's what I like to point out. So 10 days. But guys, do you have questions?
Just wondering, do we have, and I haven't investigated, it's just an open question here. Do we have a way to show just alpha? So in other words, you know, take your Google and eliminate the market effect, eliminate, you know, all beta.
Yeah, I mean, we have like an alpha and a beta in metric here.
Yeah, I know, but on a continued basis. So like a chart where you would not show the actual price, but say the pure alpha every day.
You mean like the alpha as in, you know, like how did it behave towards the overall market, or
I mean, how does it behave on its own versus, you know, the market, right? Which then would probably make it very interesting to capture some patterns.
Yeah, that could be another visualizer that we might add. You know, as you know, WealthLab is extendable, so all of these tabs are different visualizers. So we could create a new visualizer that would then show that as a chart maybe. So we don't have it right now, but it's possible to add that.
But because what I'm thinking is then probably the price grid, could work on patterns specific to a stock. You see what I mean?
Yeah.
Once you eliminate all the market noise.
Mm-hmm. Hey, I just wanted to jump in and show that even though I didn't make the connection at the time, WealthLab does have an alpha indicator that is doing exactly what Michael is suggesting. So here we have the indicator alpha applied to Tesla. If we look at the properties, you can specify an index symbol. Here we're using SPY. So this indicator is in effect kind of removing the noise from the market on Tesla and showing just the alpha here. So the alpha indicator is what Michael was describing there.
So there's a million ideas, and don't give Dion too many ideas, because then he's gonna
we're starting to get some complaints that we're doing too many new features and new enhancements. So
and quite honest, yes, it's a good idea, and yes, there's another good idea, and yes, here's another good idea, and you put 10 people here. I had about 20 people signing up for this one event, and we end up with 3. But there's always something you could do, but the more complexity you put into something, the more it becomes how to say that it becomes optimization.
Okay, let me ask you then the easy question, Volker and Dion. Are you using it on a regular basis as part of your sort of daily meta stuff?
Am I using PriceGrid?
Yeah.
No, I'm not.
And I am not using it yet, because this is relatively new to me, but I am amazed about, and I would probably say that this is one of the patterns that I would probably believe in more than anything else. It's probably hard to believe in, because it is, you just draw a box and then you create an indicator, or you create some kind of rule, and it's so easy.
It's just another tool. I mean, it's a market analog, so you're capturing something that happened in the market in the past, and then you're seeing if it provides any way to let you know what might happen going forward.
Yeah.
Well, you could, the one thing that I wanted to do, which I haven't done there, is, add an indicator to it and say this, it has to be this price grid, and then it has to be, the RSI has to be below 30 or something. It's so easy to include this as a rule. But, the more I drag over and the more I run with boxes here, the more I'm optimizing it. And, for me, as I said, I would probably do walk forward testing, which I don't have to do with the price grid, because the price grid is, I was looking at the chart and I was thinking, this could be this is a pattern that I like to buy. And I mean, I'm just looking at this one. Google, look at this. No.
Yeah, you got lucky there, because it gapped up above your you see the little red dots, that was your profit target level, and it gapped up above that, so you got a really good exit there.
Yeah, absolutely. I mean, but it bought it here again after this long downtrend. I mean, Google was pretty good. So I wonder, I can switch here, right? Should be seeing it now. Oh no, this is not, I was not doing eBay. Where's Google now? Gone. Anyway, so I mean, these are the signals, and I wanted to go through the positions that I have on Facebook. Look at this. Wow.
Well, yeah. Now the strategy is a long-term holder of Facebook.
Wait, no way. I don't think I bought the system. Well, yeah, I did.
It is. You bought it
Yep.
like around 3:30. So
Yeah.
just waiting for it to get back up above 360. It might happen.
Yeah, but yeah, I'm confident about Facebook, but Meta. Yeah, but the thing is, it's, and even holding Facebook is not it is a machine that continues making money. And in fact, it had another, this is the buy signal, right?
Yeah,
This is the buy
because
signal.
you're doing single position.
Yeah. It would have had another buy signal if I would do multiple positions. So that's another interesting fact here. And but yeah, so we didn't even. It's already 10 minutes to 7 here in Germany. We didn't even had a chance to talk about the Evolver, Dion, and something else I think was on the topic. But I think this is really a great feature, and I have pretty much confidence in it that it continues to be profitable. And the way that I would test it is I would actually run it on some crazy German market here. And I haven't done that, so I might find out that I'm totally out of my way. Let's make it 3%, run backtest. And, going to a totally different market is also sometimes interesting, especially since we have survivorship-free data on the what is it called? DAX. Yeah, so you see in the past 10 years, it's been
Well, that's not bad.
Going up.
That's not bad for the DAX.
No, it's not bad for the DAX. And if I probably increase this period to 20 years, which I think we cover the data, it might, I don't know. It's out of sample data. This is pure out of sample data. And everyone who knows the German market compared to the US market, the German market doesn't go up as much and as straight as the US market did in the last 100 years. Let's put it this way.
Yeah, so, I've heard some traders had a hard time trading that DAX futures.
Yeah, I heard that too. I think I was the guy. So yeah, but I mean, all in all, look at this. This equity curve is good. Pure out of sample, it's still good. It's not the dark green shows us we still have room to increase our position size. So we do it to 4%. I'm pretty sure we didn't had a single NSF here. Let's check that. Yeah, it was on 0. And the exposure was at 31% only. So now we get a better equity curve. This is how I do my testing and my strategies. And see, now it's actually much better, closer to what we had. And we have an APR, and the benchmark is actually the Q, so that's not fair. But yeah, it's, let me see my open positions here. Well, unfortunately, I have all these losing positions on top. That looks bad. But yeah, I'm sure they come back. German stocks are undervalued totally. But the strategy, all in all, look at the equity curve. Looks nice. Gotta admit it.
This is really, it's really nice. Did you say there was an Evolver attack that goes along with this?
Yeah, and that is Dion's part now, and maybe
yeah, it's pretty simple. Yeah, I think we could just open it up here. It's also part of the chart patterns extension. So if you go to the extensions menu and select PriceGrid Genetic Evolver.
This is now the genetic evolver. Okay, so this is totally different. Now Dion has to lead me through this.
So it, it's basically, you have two tabs there. You have your price grids, So if you just click the evaluate button, the green button, what it'll do is it'll load whatever in sample and out of sample data you selected up on the top there. So it's going to load all that data, and then it's going to run the evaluation on your PriceGrids. I can't see the status bar on the bottom to see is it running? I think it's evaluating now, right, Volker?
Yeah. Out of sample, I have. Oh wait, maybe if I'd.
Sorry, how do you define in sample and out of sample?
You define them up there in those toolbars, the in sample and the out of sample data range. So
I do it here, right, Dion?
Yeah.
So if I would put the DAX here and say test it for 10 years, and then I would say use it on the Dow, and then I say and run it for 20 years, that would be then out of, or let's leave it at 10. So I say load data, and then I had, and then I use, I actually say not after 2 days, let's give it 5 days. And now if I press evaluate, it's actually very fast. At least it looked to me like this. See, there it says evaluating.
Yeah.
So it's running 100. Oh no, you know what? I'm on the wrong one.
No, that's fine. Yeah, I just wanted to show that first of all. So it just did an evaluation of all of your PriceGrids. So it was finished. Yeah, it was done.
Mm-hmm.
So you could see the in sample, the number of observations, the number of hits that you had, and then the average 5-bar return after those hits, because you set it up to a 5-bar return over there in the toolbar. And then you also get the average 5-bar return of the overall market. So you can see, is your PriceGrid giving you an edge? So the average market return is 0.1323. So it looks like your PGE, your T1, your T1A, your T3, not the T6 though.
Yeah.
And the test has a higher 5-bar average return than the market. So this is in the in sample. Now in the out of sample, you could look at the same thing. You could see what your average out of sample return is compared to the market's out of sample return. And that's going to come into play if you click on that genetic evolver tab. Because what this genetic evolver does is it creates randomized PriceGrids, and it keeps the one that has the best 5-bar return on the in-sample data. So if you just start the evolver, you'll see it just create a bunch of random PriceGrids, and it's going to analyze them on the data, and it's going to keep the best ones. It's going to throw out the worst ones, and it's going to do that generation after generation, and it'll kind of slightly change the top ones a little bit to try to see if it can improve them. So, it's just like our strategy evolver, but it's doing it on PriceGrids. So it's evolving profitable PriceGrids based on the in-sample data.
Wow. And this is ongoing all night until you stop it?
Yeah.
Wow.
So I think it's important to, since to elaborate maybe a little bit. So the average 5-bar return on the DAX or the Dow, I can't remember which one, the in sample, so which is the DAX, is 0.13%. In 5 days, in 5 trading days, you make 0.13%. If you would take this PriceGrid, it had 778 possible trades, right, Dion?
Yeah,
And
it had 786 times where it was above your minimum confidence level that you have set there to 80.
70, I see 778. You talk about this one here?
Right, but look in your toolbar where it says minimum confidence 80. That's one of the settings in the toolbar.
Okay, yeah.
So
Where's
that's where the 778 comes in. There were 778 times in the in-sample data where that price grid was, had a confidence factor of 80 or above.
Uh-huh. And in this period, the average profit was 0.68%.
Right.
Whereas the overall, or the market here only had 0.13%. So this is actually about 5 times more than what you would have had.
Yeah.
And in the out of sample, it had a 0.229, well, 0.23%. And this is actually, a little bit less than the in sample.
So why don't you, if you click on it, we can see what that price grid looks like. So there it is.
Nice.
There it is. Yeah, I mean, it's in principle a little bit like mine. I just think it has it's a smaller dimension. I usually have like, I think 9 times 7 or something. So it's a smaller dimension. That's why I think it's not that good. Just me saying. And but I mean, this one looks good. So
I mean, I do see, it looks like we have an issue here because there's no out of sample observations or returns. So I'm going to take a look at that and see what might be going on there. I would expect to see those values there. So could be a bug.
Could be that we stopped, could not be that we stopped too early, right? No?
No.
Okay, so yeah, that was the evolver does a lot of, but I can see now what it was doing, but I still prefer my I mean, they look pretty much the same, right? But they look pretty much like my pattern too. So it's interesting, very interesting. I think this is one very interesting feature and a very good. Oh, we've got another guy here. Hi, Jörg. I think this is the PriceGrid is a great tool. This is a fantastic tool. And as you could see, there were some really interesting results. And this is the evolver, which actually you generated by random, right? This is.
Yep. Mm-hmm.
Okay. Is the evolver based on the price grid you previously created?
Is that what?
The evolver.
No, it doesn't use any of the price grids that you previously created. It's all randomized.
Yeah. So if you go down here, you see different price grids. See this, but it's evolving for bullish signs, right? It's not saying it's basically evolving to go long. So, and you could see this one. It actually didn't even have a good result in the in sample. So you probably find everything that goes down and then sideways more profitable than anything that goes down and up again. So that V shape. Maybe it is because you already missed most of the move. I don't know. It's not my thing, but yeah. But the revolver does it all automatically, and the price grid itself does it by you basically decide which kind of pattern you want to see.
So maybe to wrap things up, we could show how if you right-click on that top one there, the number 36, you could then say add it to your library.
Yeah, and that's
give it a name.
PriceGrid 2. Yep. And then I say okay, and then it'll be.
And then if you go back to your PriceGrid Editor, then you'll see that in the list.
Yep. Yeah, so here's the Evolver 2 now that the Evolver basically did. And, you know, in comparison, you see the width and the height. In comparison, what the T6 did, this is a much more complex, I would call it more complex or detailed dimension. And the results were actually better. So, but, you know, I'm not sure whether this is related, but for those who watch from the beginning, it is really fantastic. So, and this is a small dimension here.
Any recommendation on the N bar return, number of bars?
It's you know, purely your own preference. Are you looking for like short kind of trading opportunities, or are you trying to look? I mean, the one thing I would say is if you're trying to look further out, then the dimension of the data you're looking at should probably be larger.
Yeah, and in fact, I'm doing a video on Saltamontes, which is on world signals, and that strategy had a great last few months. And I know that this pattern or this strategy buys when it drops a lot, and it exits. It buys on the open, and it exits always on the next day's open. So it's just a one-day strategy. So, and I think, Dion, the system that I covered last week on World Signals was yours, which basically does something similar. Sharp drops, buys it, right, Dion, and then tries to exit on the next day if profitable. Yeah. And then I think you have some kind of a time exit to not go into that situation like this strategy does, that you hold a Intel for 3,000 bars or whatever that was. So, yeah. So right. I think we're wrapping it up here a little bit. For those who came in late, you can watch the video that we publish. Yeah.
Thank you. Thank you again. Great week.
Yeah, you too. Talk to you then. Bye.
Bye.